Okay, this is Module 4, Cash Flow Analysis. So at the end of Module 4, you should be able to discuss the importance of analyzing the cash flow of a cooperative, explain the statement of cash flows, identify the various sources of cash, distinguish between the indirect and direct method, and identify some limitations in the current approaches to reporting cash flows. So the number one thing to remember is cash is king. I cannot overemphasize the importance of really maintaining close control over cash. You have to know the timing. And timing is really important of cash inflows and outflows, because if you have sales, for example, that you made on credit, and you allow people to take 60 days to pay you, but the goods that you're selling, if you have to pay for those in 30 days, you can see the problem. You're going to have a major cash crunch and have to borrow money. So sometimes what I find is when businesses do projections and they do their budgets, they just look at their sales and their expenses. They don't take into account the timing of when you actually receive the cash for the sale and when you actually have to pay for the goods that you're selling or pay for the salaries of your employees, that kind of thing. And obviously periodically there are times when you will need to access a line of credit, for example, from a bank or a credit union to bridge the company over. But it can only be for a short period of time. At the end of the day, you've got to have more cash coming in than's going out. It's fairly straightforward. So sometimes people make decisions based on projections of, I'm going to, sell $1 million worth of this particular product, and the product is only going to cost me, with salaries and the cost of the product, $500,000. I'm going to make $500,000. But they forget there's cost to setting up your company. There's a lot of upfront investment that has to be made. So a lot of people, surprisingly, forget about all of the upfront costs you have to cover to get the business started. So the statement of cash flows is very important. It provides detailed information about cash receipts and cash payments. It helps predict the amount and the timing of future cash flows, and it looks at management decisions by reporting how the cash was obtained and how it was used to operate the entity. Also, it helps you determine the ability of the company to generate cash necessary to provide the patronage dividends, to pay interest on debt, and principal repayment on any loans that you may have. So it's important as well to explain the difference between net profit or loss, which is an accrual measure of performance, versus the cash flow, the cash generated from that net profit or loss. So all of these topics will become a little clearer as you work through the online textbook and the examples there, as well as the lectures. We have a methodology that's fairly unique that we use in this course. It's called Operating Cash Flow After Interest and Distribution, OCFADE for short. And this is just another way, a more simplistic way for non-accountants really to look at their cash flow. So this was developed by my predecessor who used to teach this course before me, Alan Robb. He's in New Zealand, and so he's done this work for a number of years, and he's now retired. But it's a non-technical, more visual way to look at cash flows, and it can be very helpful in terms of explaining it to, say, the board of directors. You could easily have a board where none of the members have a background in accounting or finance, so it's a good way to present the information. And Wendy Holmes, who's an MMCCU graduate, she actually wrote a case study on how if an organization that she was familiar with had used this tool, they probably wouldn't have ended up, going bankrupt. So it's a dairy co-op that she's talking about, and I have a video of my conversation with her where she goes into that in depth. So for your Living Lab, for this module, I want you to use this OCFADE framework. You can apply it to your own cooperative or another cooperative of your choosing. And to prepare a graph, all the instructions are there and all the information is on Brightspace how to do this. But prepare a graph of your cooperative's financial position. Interpret your findings. What is the graph telling you? And, if your cooperative fits any of the criteria other than the star, then identify the potential measures that could be taken to address the situation. So if that graph is giving you, a picture of trouble down the road from a cash point of view, that's something you need to address. And then I'd like you to compare this OCFADE approach to the traditional cash flow statements that every organization would be using. So just to discuss the advantages and disadvantages of using OCFADE, and then comment on how OCFADE might provide a different picture of your cooperative's financial health than would have been ascertained through just your regular cash flow statements. So again, I don't want to leave you with the impression that I'm recommending you not do your typical cash flow statements that's included with your financial reporting. But this OCFADE is just one additional tool in the toolkit to help you analyze performance and, more importantly, explain it to other people in the organization who may not be accountants. So that concludes Module 4 video.